Okay, back on the green screen here. We're wrapping up the book, talking about kind of future planning and things of that nature. We just talked about kind of credit and leveraging credit, building credit. But another subject on that topic is savings. You know, the one thing that I just started doing when I started Ryonet is just putting all the money back directly into the business. And I think that's a great way to grow, because you don't have to take as much debt out in the beginning, and you're using your own money. But also, one thing I totally regret, and I don't regret a lot of things, and not like I haven't learned from it, so I don't really regret it, but is I would have started saving sooner. And so it's really hard to save when you're growing a business, because it's money, and you can use that money for a billion different things, right? But it's also so important. So one of the things that we started doing is a 401k plan at our company, about 5 years after we started. And the great thing about those programs is you can save and then we match. It's all tax deductible, but you're paying yourself first. So it automatically comes out of your account. And I think money kind of expands, you know, up and down. It's a fluid thing, meaning that you can always spend more money, but you can always live or survive on less money. I mean, you guys run a business, and sometimes you do awesome, and sometimes you don't do great. And what do you do when you don't do great?
We spend less money.
You figure out how to make it work. What do you do when you do great?
Spend more money.
You know, and so the thing is if you save first, pay yourself first, you're gonna figure out how to make your business grow, how to make your business succeed with the money that you have left over. But you have to come up with mechanisms to do that, because you will never probably do it on your own, because you're always gonna be using that money. So what are your thoughts on setting money aside? And what are ways that you save and or have your help your team members save?
It's a good question. Thanks for asking. Moving on. So those are all things that I think a lot about. And several years ago, I was asked by an older gentleman what my exit strategy was, and I had never even considered that, because being in your young 30s, you're usually not thinking about what's going to happen when you're 50 or 60. And so at that point, I started thinking a lot more about that, about my, you know, what does 5 years from now look like? What does 10 years from now look like? And whenever you start a new business, what happens a lot of times is you have to buy a lot of equipment, or you get loans, and these loans last anywhere from 3 to 5 years. And so you start looking at what happens at that 3-year mark, at that 5-year mark, when those loans start to fall off. What can you do with that money that you're already used to spending? So what we've done with money like that is compensate better. So we take care of our employees better, and we try to take care of ownership better, so that we can take that money individually and put it somewhere that is good for our families.
There's a couple different ways, and you know, a lot of younger businesses, like I said, I wish I would have done it sooner but didn't, is growing a business and then selling that business, buying real estate, paying yourself rent. Those are great ways to save money without actually saving money. You know, I bought a lot of real estate at the beginning, and though real estate's not the best investment, it all accrued, and we made money on all of it, and it was a great long-term investment. The other thing that is interesting about growing a company, plus especially if you plan on selling it, is that the capital gains tax structure versus income tax structure is much more advantageous. So if you start at zero, you're just starting out, and you sell your company for $1 million, you're only paying about 20% taxes on that, versus if you made $1 million, you'd pay probably 35–40% taxes on that. So you're basically paying half the tax on capital gains and growth. So the point of a company is it's probably the best wealth creation tool there is. And if you can grow that company and save money at the same time, you're gonna have something to fall back on in case something does happen. So try to save at least 10%, and you can do that pre-tax. That'll actually save you money on taxes, so you're actually really only saving 6% roughly, depending on your tax bracket. And then come up with ways to make that automatically happen.
So there's exercises in the book based on building a budget. Building a budget is extremely important because you're moving a lot of money through your business. You need to know which things you should be spending money on and which things you need to cut out. And when your revenue only hits this when it should have hit that, You know where you can shrink back money and make sure that you're still breaking even or doing better in those hard months. I recommend having some sort of accountant to work with on a regular basis if you're not big enough to have an accountant on staff. Hiring someone like a fractional CFO, someone that can be guiding you through spending money and helping you save money and helping you spend money in the right places. Like Ryan's talking about maybe buying some real estate or something like that. If you work with a banker and a fractional CFO, those people together can work with you to make good decisions on where to put your money. And when we were talking about financing and those types of things in the previous episode, having a banker and a fractional CFO look through those contracts that you're about to sign to say, hey, there's a red flag here or something like that. Those help you with your future so that you can make sure that you have money at the end of those leases and that it's not going to be some balloon at the end that puts you out of business.
Yeah, there's a lot of great tools we see in our industry that can actually help save on taxes, which you're going to have to pay one way or the other, and then take that money and then use it for something else. So Section 179 is a great one. It allows you to write off equipment. It's gone up and down over the past few years, but I think they've locked it in the up position. Meaning I think it's like $500,000. You can buy equipment, and that equipment can be financed or it can be bought with cash, meaning that you don't have to pay for it right away, but you get to take that tax deduction. And let's say you made $100,000. Well, instead of paying $30,000, $40,000 tax, you get to buy a $100,000 press, finance it over 5 years at a low, a good interest rate, and write that off. So you save $40,000 in taxes right there and get a new piece of equipment that helps you run your business smarter. So that's a great way to do it. The other thing is setting up plans. If you're a company, a 401k plan, for a person, an IRA, allows you to save up to about $5,000 a year tax deferred. And then also there's whole life insurance and other different ways that you can use to save money.
Money's fun, right? I hope that we have more of it in our banks than in the IRS's bank.
Speaking of money and assets, it's probably a good thing to protect those. You want to protect your assets.
Yeah, so this is something that I have learned over the last couple of years, different ways to protect yourself. There's a whole lot of different types of insurance out there.
Super important.
And we all know to get liability insurance because we have to have it for our building, or our landlord requires it or whatever. But there are different types of liability insurance, such as employee liability insurance. Once you have a lot of employees, anything can happen. You can have employees that say something stupid.
They can steal from you.
They can steal from you. They can do something stupid that causes you to be liable for their actions. And so when you are delivered a lawsuit, it's you on the hook for paying the legal fees and paying any sort of settlement or judgment. So if you have insurance that is employee liability insurance, it has a deductible. You just pay that deductible and the insurance company would pay all the legal fees and any sort of settlement or judgment. A couple years ago, I got sued and it didn't feel good. It ended up costing me about $30,000 just to pay legal fees and pay a very small settlement.
So I think insurance is one of those things that I overspend on. We could probably save thousands of dollars a year, but I was like, all right, let's get the most of this, let's the most of this, almost the most of that. We even have earthquake insurance because I'm kind of like a doomsday. I think we're going to have a massive earthquake in Portland sometime. It's not something standard you can get, and if we do, we're done. I mean, our building, but now we're insured. We have loss of business coverage. We've had team members that have sued us or even stolen from us, that we've had employment fraud and all that kind of stuff set up, so we can then just go get paid from the insurance company. I think one year we had a couple lawsuits and 2 fires, and our insurance company was like, dropped us.
What a year.
That was 2000. It was actually good because it was the end of the year and we weren't renting our building. It was a building in Arkansas that we were actually selling this year. And we were like having the end of Christmases are rough, right? Yeah. In the screen printing industry, Christmases are never fun. And Chris Miles, our drummer, he owns Nortec Graphics, who was renting the building at the time. He calls me and he's like, dude, the roof's on fire. And I'm like, what? Dude, the roof's on fire. I'm like, and he's like texting me pictures and I'm like, is everyone okay? He's like, yeah. I'm like, yes. And then another time in Arkansas, like a hailstorm came by and like completely ripped our roof off. So one of those settlements was $200,000. Another of them was $350,000. The roof on we bought the building for $350,000, and the hailstorm wiping out the roof replacement cost was $350,000, and then we just didn't replace the roof. Which you don't legally have to do. Legally, you probably we said we were going to do it ourselves, and they just never did. And then we sold the building for a little bit less than we paid for it. So having those good coverages is super key.
And know your state laws and state requirements. In Texas, you actually don't have to carry workman's comp insurance.
Don't do that.
So if you don't, you need to make sure that you follow all the guidelines, all the rules, make sure your employees sign off. But I recommend covering employees. You know, if someone gets hurt on the job, I feel like you should be able to take care of them as best as you can. So having workman's comp insurance will do that.
We also, one of the things that we've noticed is insurance is short-term disability and long-term disability. So it really sucks when somebody gets hurt or when somebody gets sick, and as a good person, you're apt to try to want to take care of them. So if you have those insurances for your team and your company, that insurance takes care of them, and you don't even have to. We had one guy who was horrible. He had cancer, you know, and so we ended up paying him for 6 months. He barely was able to work. Versus that same thing has happened since, and since that time we got like really good coverage. We can just send them on medical leave and they get 70–80% of their income, and we can feel good and make sure that they're covered and go hire somebody or not spend that money and not get any value out of it. So it's a win-win situation. It doesn't cost that much.
So there's a lot of guys out there, insurance brokers. You can, you know, interview them, ask lots of questions. Yeah, make sure you find someone that you really trust to buy insurance from, and you know, load up on insurance. Yeah, you got to cover your assets.
And now that we're protected, we're going to talk about growth, because if you're strong, you can grow better. So stay tuned.